Welcome back to Investing Talk Podcast. Today, we're tackling a question many of you have been asking, especially with all the buzz around digital assets. Is Bitmine Immersion Technologies a good time to buy now? We've gathered, well, quite a stack of recent reports, financial filings, market analyses, trying to really get a handle on this company. If you like what you hear today, please take a moment to subscribe, like us, maybe leave a comment below. And hey, if there's a specific company you want us to look into next time, just let us know in those comments. Okay, so Bitmine Immersion Technologies. It's a name that might sound a bit niche, maybe a little technical even, but they are deeply embedded in the world of digital assets. Historically, they've operated as both a direct Bitcoin and Ethereum miner. And they also provided advisory services, strategically focusing on finding those low-cost energy spots, places like Trinidad and Texas. They're also known for using immersion cooling, which is, well, it's pretty cutting-edge stuff for mining efficiency.
Yeah, absolutely. But what's really fascinating here, I think, is how their story has evolved, dramatically. It's gone way beyond just being a mining operation. The company has recently made this huge strategic pivot. They've really transformed themselves into a dominant player in the broader digital asset space, specifically becoming the world's largest Ethereum treasury. And this isn't just like a minor shift in focus. It's a really profound strategic change. And it's definitely caught the attention of institutional investors, the big money.
The world's largest Ethereum treasury.
Yep.
Okay, that is a massive claim. Can you maybe walk us through the specifics? How did they pull that off, and what did these numbers actually mean for, their new identity as a company?
Absolutely. Yeah, to really get the scale of this, you have to look at their public disclosure from August 2025. Bitmine announced its crypto plus cash holdings totaled, get this, an astonishing $8.98 billion.
Billion with a B.
Exactly. And this isn't just some abstract number. It's a fundamental re-rating of the company. This figure includes 1,866,974 Ethereum ETH, right? And about $635 million in cash. Let me just repeat that ETH number because it's kind of mind-blowing. Nearly 1.9 million ETH.
That's incredible.
Yeah. So this instantly makes them the largest Ethereum treasury anywhere in the world. And if you zoom out and look at all digital asset treasuries, they're now number 2 overall, just behind MicroStrategy, who are obviously famous for their Bitcoin holdings. So Bitmine has pretty much pivoted from being just a miner, really vulnerable to energy costs and hardware cycles, into something more like a de facto institutional-grade crypto investment fund. That's a huge shift in their risk profile, what drives their value. It separates them from the traditional miners.
And you mentioned institutional attention. That market reaction, it was pretty immediate, wasn't it? We saw the shares trending up significantly in September 2025. Seems like investor enthusiasm for that huge Ethereum stack, maybe combined with institutional money flowing in, it translated directly into, well, big trading volumes. Reports showed a daily jump, over 6.4%, and a recent spike of 35.5%. That's serious movement. But, in a sector as volatile as crypto, is that immediate excitement sustainable? Or could it be, FOMO, maybe overshooting things based on short-term hype? Are there counter arguments to that surge?
That's a really fair point. And it's something, every potential investor needs to weigh up. The surge is definitely powerful. It shows real market conviction in this new strategy, no doubt. But you're right. The crypto market is notorious for those fear of missing out rallies. FOMO is real. And that can sometimes push prices way ahead of the, let's say, underlying fundamentals, especially for a company changing this fast. So while the institutional interest is definitely there, the sustainability of it all, it hinges on a few things. 1, the Ethereum price itself needs to hold up or keep growing. 2, Bitmine needs to actually manage this massive treasury effectively. That's not trivial. And 3, how does regulatory clarity or, the lack of it impact the whole crypto space? Any big dip in ETH prices or new regulatory hurdles popping up, that could easily reverse some of that momentum fast. It just highlights the volatility baked into this new model.
Right. And you mentioned how they pivoted. How did they actually fund buying nearly 1.9 million ETH? That takes serious capital.
It does. And to understand that, we need to rewind just a bit, back to July 2025. That's when the company made another really bold move. They expanded their at-the-market, or ATM, common stock offering. They boosted it from $4.5 billion up to a huge $24.5 billion.
Okay, so an ATM offering that lets them sell shares gradually into the market, right? Not one big dump.
Exactly. It gives them flexibility. They can sell shares when the price is right over time. And this wasn't just general corporate fundraising. They were explicit. It was to fund more digital asset buying, primarily Ethereum, it turned out. It was a very clear, very deliberate bet on crypto appreciating long term. They finalized that ETH treasury strategy on July 8th, and then bam, within just weeks, they hit those key accumulation targets, just cemented themselves as this major crypto treasury player.
Wow, that's fast work.
It really is. And it speaks to their agility. Part of that comes from using something called shelf registrations. Think of it like getting pre-approval to issue stock later. It means they don't need a fresh shareholder vote every single time they want to sell more shares under that ATM program.
Ah, so they can act quickly when opportunities arise.
Precisely. It gives them incredible speed to capitalize on market conditions, much faster than companies without that setup.
Okay, so we have this massive treasury story, the market excitement, the funding mechanism. But what about the more traditional side, the core financial health before this pivot? What do their latest filings actually tell us about the underlying business?
Yeah, good question. So the most recent detailed annual report, the 10K, that's readily available, covers the fiscal year ending August 31st, 2024. It was filed in August 2025. Now, these filings, they do cover things like their Bitcoin production volumes from mining, how they value the digital assets on their books, their energy costs, that's all in there, in depth. However, it's important to flag that precise revenue numbers or year-over-year growth figures for that period. They aren't directly cited in the public summaries we looked at.
Okay. Not unusual for fast-moving sectors, maybe.
Not entirely unusual, no, especially when a company is in transition. And when you look at profit margins for crypto mining, well, they fluctuate wildly. They're driven so much by crypto prices, Bitcoin, Ethereum, and of course the cost of energy. So specific operating margins, net profit for fiscal 24, again, not explicitly broken out in the summaries currently indexed. And there's no analyst consensus estimates or official company guidance for future earnings either. That makes it tough for traditional financial modeling, you know? It's common in this less covered space, but still a challenge.
Yeah, that lack of forward guidance is tricky, which leads to the next obvious question. What about their balance sheet, their cash flows? Do we have a clear picture there, especially now with this huge digital asset component?
Well, the detailed balance sheet and cash flow statements are in those 10K and quarterly 10Q filings. Those are public docs. But again, looking at the summaries we reviewed, specific up-to-the-minute figures for cash, debt, free cash flow, they weren't provided. What was noted, though, is there's no mention of significant long-term debt in the available disclosures.
That's a positive, at least.
It is, though you'd want to comb through that latest 10K to be absolutely sure. As for cash flow, well, it's pretty typical for this sector. Cash from operations likely swings around quite a bit. It depends heavily on their mining output and, crucially, the market price of the crypto they mine or hold.
Right, because the value of their product changes constantly.
Exactly. One day they might mine crypto worth X, the next day it's worth Y. That means their operational cash flow can be quite unpredictable. That's a key thing for investors seeking stability to understand.
Okay, so given all that, the competition, the sort of opacity in some of the traditional financials, how does Bitmine actually stand out? What's their unique selling proposition in this crowded market?
Well, a couple of things. That focus on immersion cooling for their mining rigs. That's potentially a real efficiency advantage. Compared to traditional air cooling, it could mean lower operating costs, maybe longer hardware life. It's a technical edge in a power-hungry business.
Okay, so efficiency on the mining side. What else?
And then there's that ability to raise capital using those shelf registrations. That gives them distinct funding flexibility. Like we said, issuing new stock without needing a fresh shareholder vote each time. Not all the smaller miners have that.
Right, the pre-approved shopping cart for shares.
Exactly. It lets them move fast to buy more assets, like we saw with the ETH treasury buildup. That's a big edge for rapid capital deployment. But, and it's a big but, you have to remember this sector is incredibly competitive. Success hinges massively on securing cheap power and the latest, most efficient hardware. And those are constant battles for everyone involved.
Makes sense. Okay, let's pivot to the stock itself. We know it was trading around $44.86 on September 3rd, 2025. What else stands out to you about its recent price action or market sentiment?
Well, like pretty much any stock tied closely to crypto, the day-to-day price swings are, let's say, significant. High volatility is the name of the game. The price gets pushed around by both the minute-by-minute moves in digital asset prices like Bitcoin and ETH, and also by any news about regulations affecting the crypto space. Looking at recent trading, it seems like the price has been consolidating a bit in the mid-$40 range. But don't mistake consolidation for calm. The underlying volatility is absolutely elevated.
So, handle with care.
Definitely. It's not your stable dividend pair, that's for sure. On a positive note for investors, though, the company did reaffirm its listing on the NYSE American Exchange on September 5th, 2025. That might sound routine, but in the current climate, with regulators really scrutinizing crypto, reaffirming that listing is actually quite important. It provides some assurance about access to U.S. capital markets.
Yeah, that stability is key, especially if they want to attract more traditional institutional money. So, looking ahead then, what's on the horizon? What should listeners be watching out for in the next, say, 3 months or so, besides just the daily crypto price swings?
Okay, yeah, looking beyond the day-to-day noise, there are several key dates and potential catalysts lined up. Investors should probably circle these on their calendars. First up, September 26, 2025. We're expecting their Q3 preliminary trading update. That should give an early peek at performance.
Okay, first look at Q3 numbers.
Then, October 4th, there's a major ETF rebalancing event for crypto tech indexes. Depending on how Bitmine is weighted in those indexes, this could trigger significant fund flows, either buying or selling pressure.
Right, index inclusion matters.
It does. Then October 15th, they've scheduled a Columbus Day strategic update. That's a corporate event, so maybe we get some forward-looking statements, new strategy details. Could be interesting.
A chance for management commentary.
Precisely. Moving into November, on the 3rd, we get the institutional holdings filings, the 13 FFs. These show what large investment managers own. So we'll see if more institutions bought in during Q3 or if any sold.
Always telling to follow the big money.
Definitely. And finally, November 18th, 2025 is the full Q3 2025 earnings report. That's the comprehensive look, financials, asset values, treasury management details. So those are the scheduled things. But of course, any big news on crypto regulation or just significant swings in Bitcoin or Ethereum prices themselves, those can act as powerful catalysts anytime. And you can't rule out macro shifts or even M&A activity in the space.
Right, lots of moving parts. What about the rumor mill? Any speculative stuff floating around, the kind of chatter that gets investors excited or maybe nervous?
Oh yeah, the industry chatter around Bitmine is pretty active right now. There's quite a bit of speculation about a potential spot ETH ETF finally getting listed in the US. And given Bitmine's absolutely massive Ethereum treasury, the talk is, could they become a partner? Or maybe even an acquisition target for an ETF issuer needing that underlying ETH.
That would be huge.
Yeah.
A game changer.
Potentially, yes. Then there are these unconfirmed reports, stress unconfirmed about exploratory M&A talks, supposedly with major Wall Street firms looking at joint digital asset product development.
Wow, okay. Mainstream finance meets crypto treasury.
Could be a big validation play if true. Another area of speculation is leveraging those ETH assets through staking as a service, basically using their ETH to help secure the Ethereum network and earning staking rewards in return.
So diversifying revenue beyond just mining or holding.
Exactly. It could add a whole new income stream. And finally, there's ongoing debate about how new SEC guidance, maybe through something called the Genius Act, might impact them. The details are fuzzy, but it aims to regulate certain digital assets, how it classifies ETH or companies holding large amounts. That could really shift things for Bitmine.
So lots of potential catalysts, but many are still speculative what-ifs.
Precisely. High impact possibilities, but you got to remember they're rumors and speculation at this stage.
Okay, this is where we need to inject a healthy dose of caution. There's clearly momentum, exciting possibilities. But when we ask, is it a good time to buy? Oh, we absolutely have to talk risks. What could go wrong here? What are the big red flags for someone thinking about investing?
Right. The risks are definitely significant, and the company lays them out in detail in their 10K filings, usually under Item 1A, risk factors, that's required reading, stock-specific risks. Well, number one is obviously the extreme volatility of digital asset prices that directly hits their mining revenue and, maybe more importantly now, the value of that huge treasury.
Yeah, a big drop in ETH price would directly impact their balance sheet in a massive way.
Absolutely. Billions could appear or disappear, theoretically. Then there are risks around their power contracts. Mining needs cheap power. Any disruption or price hike there hurts badly. Regulatory scrutiny is another big one, especially around how these large crypto treasuries are viewed and potentially regulated.
And what about the funding? You mentioned those ATM offerings. Is there a downside there?
Yes, the capital needs and potential dilution risk. Using those shelf registrations and ATM offerings is flexible, yes, but every time they sell new shares, it increases the total number of shares outstanding, which means each existing share represents a slightly smaller piece of the pie that's dilution.
Got it. So company-specific risks are plentiful. What about the wider market? What broader risks affect a company like Bitmine just by operating in this space?
Those are substantial too, and often completely outside the company's control. You've got sector-wide regulatory changes, big shifts from the SEC, or even new listing rules from the NYSE or Nasdaq. These could change the entire landscape overnight. There's also that high correlation to crypto prices generally. If Bitcoin and Ethereum tank, Bitmine stock is almost certainly going down too, regardless of how well they execute their strategy.
A whole sector moves together, often.
Very much so. Then there's the intense competition among miners. Everyone's fighting for cheap power, efficient hardware. It puts constant pressure on margins. And finally, just basic operational risks. Volatility in energy prices globally, supply chain issues, getting the latest mining gear. These are persistent threats to profitability. These aren't small things. They're fundamental challenges in this industry.
Okay, so stepping back then, trying to put it all together.
Yeah.
How do you assess Bitmine overall?
It's complex. If you look at the rating provided in the source materials we reviewed, based on current info, it's a 4 out of 10.
Not exactly a ringing endorsement.
No. But let's break down the pros and cons reflected in that. The pros. Well, that operational flexibility from the shelf registrations is a plus. Their emerging presence as this major ETH treasury holder is definitely significant. And their strategic focus, low-cost energy, immersion cooling, those are tangible advantages on the mining side.
Okay, so some real strengths. What about the cons driving that lower rating?
The cons are pretty substantial too. A lack of clear, sustainable, verified profitability using traditional metrics, that's a big one. The extreme dependence on volatile spot crypto prices, that leads to huge swings in earnings and losses. And the significant regulatory uncertainty hanging over the whole sector, that could change the rules of the game dramatically.
Right, and the lack of detailed current financials and analyst coverage you mentioned.
Exactly. That adds to the risk profile. It makes it harder to value compared to more established companies with better coverage. Fewer eyes on it, less consensus.
So bringing it back to the listener, what does this all mean for you? If you're sitting there wondering, is now a good time to buy Bitmine? Based on this analysis, it seems like it presents high risk. Maybe suitable for short-term speculative traders who can stomach extreme volatility and trade the news swings.
That seems fair, but it's probably not recommended as, say, a core long-term holding for most investors, not with the unreliable profitability picture and the high sector risk relative to the potential reward, at least under current conditions.
It's a company undergoing a massive, rapid transition, isn't it?
It is, and that transition comes with a huge amount of uncertainty.
Yeah. You know, the whole story of Bitmine Immersion Technologies, it really highlights this fascinating tension we see playing out. You've got this incredibly rapid innovation happening in digital assets. You've got companies making these incredibly bold, risky bets. And then you have the regulatory bodies moving at their typically slow, deliberate pace, trying to figure out how to deal with it all.
Absolutely. And this emergence of huge digital treasuries like Bitmine's ETH holdings, it raises fundamental questions. How will the traditional financial world adapt to and integrate these massive pools of digital assets? What does it mean for how we even define value or what constitutes a sound investment?
Big questions indeed, ones that will likely shape the markets for years to come. Definitely a lot to think about there. Well, thanks for walking us through this complex picture of Bitmine Immersion Technologies. We'll be back soon with another investing exploration.